Good day, good day, good day. Very excited. There are some changes coming this coming tax season, and it's things like this that really get me excited because we don't know how a lot of this is going to be administered. And I'm just talking about the tips and the overtime. It's going to be really the biggest thing. What you're looking at right now is an IRS publication. I put the link in the description. And basically what it says is that the current W-2s, 1099s, all the tax forms won't be updated, so they won't break out the tips and the overtime. Now, I'm sure some of you who do receive tips, waiters and so forth, you're used to seeing your tips on your W-2s, but there are some employees that receive tips that are not used to seeing those tips on their W-2s. And going forward for 2026, those will be broken out on the W-2s. As of right now, that's not the case. So what that means is that the taxpayer is going to be responsible for reporting the overtime and the tips. That is exciting. This is what American tax is all about. This is what makes us American because we get to decide what our overtime is and what our tips are. Now, I'll tell you right now, the IRS is going to obviously be looking to audit returns that have the max deduction for tips and overtime, specifically with returns that include earned income credit, right? So my advice is always do not max out the earned income credit using the maximum amount of tips and overtime unless you have some kind of backup. My advice is always to go to the very max and then back off some. Okay, just because it's a red flag if you have the maximum amount of earned income credit and the maximum amount of deductions. Okay. You also see here there is going to be penalty relief for anyone that is not providing their employees those statements that show tips and overtime. So what that means is that employers and payroll departments don't have to be worried about paying any sort of penalty or anything for not giving this information to their employees. And so 9 times out of 10, we're not going to see these separately stated items. And even if we do see separately stated items this year for 2025, those items probably will not be reported to the IRS, meaning that the employee will receive these statements, but those statements will not be provided to the IRS. So again, it is going to be on the tax preparer to report this information. The other thing that's really important to understand, and as a professional that's been doing this for a long time, I'm not always privy to some of the retail tech software, but I have heard many stories and I have seen it for myself that specifically with companies like Intuit, right, TurboTax, they know that taxpayers will be responsible for reporting this overtime and these tips. And the question is how are they going to program their software for taxpayers to be able to go in and enter that information, right? Are they going to make it as simple as just type in the number here, or are they going to try to make it a bit more difficult, being the fact that I'm sure the story is going to go that, oh, well, people don't really understand what a tip is. They don't really understand what overtime is, and they aren't being given these statements. So how can they expect to know? And they're filing their own tax return. They're unsophisticated taxpayers, and so Intuit is in bed with the government, right? They have these talks with the IRS, and so even my professional software, I'm not sure how it's going to be done. Now, usually I can go in and just override whatever I want and put the information into the form. But again, with TurboTax and self-preparation software, who knows how this is going to go? So let's talk about what this looks like and how this is going to work. Number one, qualified tips. The first thing that this talks about is not only are the tips going to be tax deductible for employees, but also for self-employed. The IRS is supposed to release a list of um, um, the type of businesses that typically receive tips. Okay. I don't have that list in front of me. If there is a list out there, I will get it. And I'll tell you right now, that list is going to depend on the NAICS code. I may have those letters a bit backwards, but NAICS or NIACS, something like that. That's the business code, the six-digit code that you put on your Schedule C that says what type of business that you are in. If you are going to be deducting tips as a self-employed person, you want to make sure that that business code is one of the codes that the IRS listed as receiving tips. Now, here's another thing. Let's say you have a business that's selling oranges, just for an example, right? Um, if if that particular business is not on the list of items that the IRS lists as businesses that receive tips, you can just put the code that the IRS says is on the list for receiving tips, right? Because the IRS doesn't know what business you actually have and what you actually do. You tell them, you report it, right? Again, this is what makes the American tax system great. This is what makes us different than a lot of other countries around the world, is that we tell the government what we do, right? So if the IRS publishes a list and says, "Hey, these are the codes that are eligible to reduce their income based on tips," we can simply just go in and find a six-digit code, pop it into our Schedule Cs, and we're good, right? Now, if you get audited, if you're being questioned, well, you're going to have to understand how to answer those questions to make sure that whatever you put into that six-digit code lines up with what story you're going to tell the IRS, right? So that's important to understand. Remember that six-digit code is really important. It says what business you are doing, and depending on the business you're doing, depends on whether or not you can deduct tips from your self-employment income. All right. Now, let's talk about the self-employment income. One of the things that it says is that your tips cannot exceed the sum of deductions for that business. Meaning that if you have a 1099 for, let's say, $10,000, and let's say your deductions are $9,000, you cannot deduct $9,000 of tips from your $10,000 1099. Let me talk about, okay, so you have a $10,000 1099, but let's say you receive tips of 9,000. So you got 19,000 you're trying to report. Now you want to deduct 9,000 of those tips, right? Because you get up to what is it? 25,000, I think, or 12,500, one of those two. But if your deductions are 9,000, then all of a sudden you can't deduct that 9,000 from tips. So your deductions have to be less than the amount of tips that you are deducting. So if you're trying to deduct $9,000 worth of tips, then your deductions have to be less than 9,000. Simple as that, right? And keep in mind that deducting those tips from that income um, still means that you will show $19,000 of income, and then you subtract 9,000 for tips, and then you subtract another 8,000 for the deductions, right? So all your business expenses, okay? Now the question is, why is anyone going to do that, right? If the tips aren't on the 1099, why are you reporting them? Well, it's because when you are going out for loans, when you are wanting to present financials, this is something I've talked about many times in the past. Now I'll reiterate it here again. I had a professor that said that everyone ought to have three sets of books. One set of books goes to the IRS, the government. Another set of books goes to the bank. And another set of books you keep for yourself. Okay? And the reason being is because for the IRS, you want to look broke on paper. You want to look broke on paper. You want to look like you don't have a dime, right? For your banks, they want to see that you are making tons and tons and tons of money, right? So what we're saying here is, hear me out, okay? Let's say you're trying to qualify for a loan, and let's just say, for the purposes of this example, you need to have $19,000 of income to qualify for this loan. You only have a 1099 for $10,000. Here's what you do. You report $19,000 on your Schedule C, and you deduct 9,000 of it as tips. It's not a business expense, so it still shows up as income to the bank. right? This is why this is so important. And remember that six-digit code that you're putting into that Schedule C that tells the IRS what kind of business you are and whether or not you're eligible to deduct those tips in the first place. All right. Now, again, the IRS is going to release a list. I don't have it in front of me, but as soon as I get it, I will release it because I'm interested as well to see what it is. I mean, I'm sure retail is not going to be on there, but we all know that if you're selling oranges, you might receive a tip, right? We all understand that, and usually those things go unreported. Now, all of a sudden, because of financing and things like that, maybe we want to start reporting those tips. All right, let's skip down to the overtime. There's more that we can go into with the tips, but I think what I've covered right now is pretty good. Of course, if you have any questions, reach out. I can go further into it. All right, here we go. No tax on overtime. Now, the reason why I'm so excited about this one is because um personally, right, I pay myself as an employee. Okay. Hear me out. I got 12,500 that I can deduct in overtime. Now, I decide my work hours. I decide that if I want to work an hour today, I work an hour today. If I want to work, 50 hours tomorrow, I can do that too, right? So we're talking about overtime. Let's say that I worked overtime January through March, overtime every week. Okay, so automatically that gives me $12,000 500 that I can write off on my tax return, but I'm still paying myself the additional 12,500. Again, why would I want to pay myself an additional 12,500? Well, because that's going to be a deduction to my business. So it's a tax write-off. Not only that, remember that 12,500 is going to show up on my W-2. So when I show up to the bank and I want to qualify for a loan, I'm gonna have an extra 12,500 sitting on my W-2 to qualify for whatever loan I want. If you're married filing jointly, now we're talking about $25,000 if you employ your spouse, right? Same thing if you want to employ your children, right? If you want to employ your children, remember children can make up to the standard deduction every year. So this year, I think the amount is somewhere in the neighborhood of $14,000. Well, what if your kids are working overtime? Okay, well now the kids get not only a $14,000 deduction, but an extra 12. So we can pay kids 25, $26,000 this year each. Okay, and then we're deducting the overtime from that, and then they still don't have to file a tax return because their income falls beneath the standard deduction. Now, again, this is what gets me excited because we don't know how this is going to be administered by the IRS. Everyone can talk to you about code, and they can talk to you about this law and this publication, that publication. I like that stuff too. But the real truth of it is that we don't know how this is going to work until it does, right? And so typically what I've done in the past is I've always used myself as a guinea pig. I will file all kind of crazy stuff with my own tax return just to see what's going to happen, and then I will advise my clients, right? So what's going to happen here, and I've seen this happen over and over and over again. What's going to happen is 2025 is going to be the wild, wild west. And I know that there's going to be people that's going to be maxing out these deductions and they're going to get audited. It's going to happen, right? Again, we don't know what TurboTax is going to do with this. We don't know if TurboTax is just going to let people type in a number or what they're going to do. But it's coming. It's coming, right? And then what's going to happen is next year, you're going to have all these tax companies, all these professionals coming out saying, hey, now that we kind of see how this thing is working, why don't we go back and revisit your tax return and let's amend it, let's change it, let's do this and that, and let's do that. I have forever, since I started my practice, said that it is always, always best to file a tax return with all income, no deductions. All income, no deductions. Every 3 years, you amend the tax return. And you do this for a number of reasons. Reason number one, if you file a tax return with all income, no deductions, you will never hear a word from the IRS. They won't have anything to say to you. You won't have to worry about them sending you no letters or nothing. Do you understand me? And you're going to pay your taxes like a good citizen. All right? Like a good little citizen, you're going to pay your taxes. And then 3 years later, you're going to amend that tax return because guess what? You are a diligent, responsible taxpayer that wants to make sure that their tax return is accurately reported. And it takes time in order to do that. We are not going to get caught up in the craziness that's going to be this tax season with these new credits. We're not going to get caught up in it. Don't want to be caught up in it, so I'm not going to take the deduction. Just not going to do it. I'm going to wait and see what y'all do, how y'all do it, and then we'll come back a couple years later and we'll amend it. And the IRS will send you a refund with interest. And right now, the interest rate on that refund is near 8%. That is an investment. That is investing in U.S. government debt, one of the safest investments in the world. Okay? Way better than you're going to get putting your money in the bank. Way better. Safe. It does require filling out some paperwork. The IRS is going to take their time getting you the money back, but they're going to pay you to wait. Interest accrues every single day. Okay? So, with that being said, it's going to happen. You're going to have companies that's going to be promoting, marketing, advertising for probably the next 2 or 3 years, saying, "Hey, let's go back. Maybe you had some overtime. Maybe you had some tips that we can go in and figure out and change and this and that and other and the third." Okay. Again, we don't know how the IRS is going to administer this. If I'm paying my child, if I'm paying my child $25,000, let's say, right? Let's do a conservative 25,000, way well beneath the standard deduction, right? And we're gonna deduct the 12,500 as overtime. Will I, as a parent, have to file a 1040 for my child just to take the deduction? Or can I simply file a W-2 showing the overtime? That's the question, right? The other thing is the Trump plans. We know that the IRS is now going to allow children to receive a portion of their parents' 401k, which is also going to be a deduction of income. I think the number is somewhere like $1,000, $1,200. It's something small like that, but it is a tax write-off, right? Again, will that deduction require a tax return to be filed? Or do I just file it on a W-2 showing the IRS, hey, I paid them this money and this portion went to this child's 401k, right? So now we're talking about not only a $25,000 W-2 business write-off to your children, but we're talking about potentially $2,800. I mean, $28,000 per year per child. So, I mean, this is big. This is big. And again, I'll say this again and again and again. Do not max out these deductions with earned income credit. And maxing out the earned income credit. It's going to throw up a red flag, especially if the refund goes above $10,000. Every refund above $10,000, regardless of how simple the return is, the IRS automatically holds the refund for review. Now, whether or not that's a person looking at it, I sincerely doubt it, but they do hold the return for review. All right. So if you're maxing out these credits and you're maxing out earn income credit with it, they're definitely going to hold it for review. And there's a good chance that you're going to get audited because the IRS mostly audits 1040s with earned income credit. The IRS does not audit partnership returns. They don't audit nonprofits. They don't audit small corporations. I detailed this in a video called the IRS Data Book. It's been a while since I have posted a video about it, but I read the data book every year, and the numbers have not changed. The IRS audits mostly 1040 earned income credit and Schedule C's over $1 million. That's just what they do, right? And so what we want to do is we want to make sure that we're doing all this on the corporation side, on the nonprofit side, right? And so the 1040, we want it to be very clean, very clear, just a simple W-2, nothing else. We don't really want to see Schedule C's on 1040s if we can get away with it. All right. Um, I don't think there's anything else. Again, the other thing that's going to be interesting about this is going to be the overtime pay for non-employees as well. So same thing with the tips, right? So tips are going to be deductible for employees and non-employees. Overtime is going to be deductible for employees and non-employees, but we don't quite know exactly how they're going to define what that is. I mean, we know what a non-employee is, but again, we don't know how that's going to necessarily work. And you can see some of the verbiage here. The FLSA definition of employee is what they're using. Um, let me see if I can find. It allows overtime for public sector employees and fire protection and law enforcement to be based on a work period longer than standard 40-hour work week. So again, depends on your again, see, you see my point? Like we're especially I'm gonna tell you like this. If you open up a self-preparation software, you have a 50-50 shot at getting this right. If you go to I'm going to include myself in this. If you go to any tax preparer, CPA firm, whatever, still, you're going to have a 50-50 shot at getting this right just because there's a lot of ins and outs on this thing. Depending on what type of employee you are, depending on what type of work you do, depending on what your work code is, all that stuff is going to matter. And again, we don't know how the IRS is going to administer this. We don't know if they're even going to pay attention to that stuff. I mean, think about it. If a firefighter, I mean, look at this. We're talking about overtime in hospitals, residential care facilities, um, a 14-day work period. If someone walks in with a W-2 and they say, hey, here's my W-2, file my tax return, right? Am I going to ask what their occupation is? In the past, it hasn't been that important, to be very honest with you, especially after they got rid of the employee related expenses, and so, and remember, this is going to be brand new. So the idea that, and the taxpayer is going to be responsible for explaining to the tax preparer, what their role is at their job. Again, it's I promise you it's going to be a mess. And we're going to see for the next couple years people going in and fixing this stuff and amending stuff. I'll say it 3 times if I have to. My suggestion, and I always advise my clients, and I give them all of the risk returns, right? Is to file a return, all income, pay the taxes, amend it 3 years later. That's always been my advice. Always been my advice because we just don't know what we can get away with, what we can't get away with. There have been times that I will tell you like, hey, it is the anything goes right now. Anything goes. Send in whatever you got, right? Um, I'm not saying that about this just because there are a lot of unknowns. Simple as that. There's a lot of unknowns. This may be one of those things that the IRS, and let me explain this too. So the way it works is politicians say a lot of things, okay? Then they go behind closed doors and they figure out exactly, how they want to do this. No tax on tips, for instance, right? Those are just words, literally. Just no tax on tips. Okay. Then they go behind closed doors and they draft these bills, right? That still is just a bunch of words, no tax on tips. The bill passes, and then they have to take this bill to the IRS that then has to figure out, okay, how are we going to administer this? How are we going to actually make this work? Okay. Then after that, they have to also figure out, okay, how are we going to handle this when someone lies about it, right? Are we going to have a separate department that only works on these particular cases? We don't know. We don't know. The IRS publishes IRMs, procedure manuals, that talk about how they audit things, and they talk about the names of different departments and stuff like that. But I'm telling you, we don't know. We don't know. There has been times where certain departments have been completely overloaded with work that nothing gets done. And then there's times that departments get overloaded with work, and when I say nothing gets done, I mean like everything stops and it gets held up for months and months and months, right? And then there's times that departments get overloaded with work and literally nothing gets done and everything just passes through, right? And so we don't know what's going to happen with this. Um, Personally, what I'm going to do in my practice is I'm going to push the envelope. I'm going to push the envelope specifically with the overtime and the compensation. I'm going to explain the risk to my clients, and then we're going to file the return and see what happens, right? When it comes for filing the 1040s for the kids, I've never filed 1040s for kids based on W-2s under the standard deduction. And I don't plan on filing a 1040 for a child under the standard deduction with overtime or 401k. My thinking is we're going to file everything, send it to the IRS. If they want us to file a 1040, they will tell us, hey, can you please file a 1040? And we'll say, okay, fine. It's a zero 1040 anyway. There's no taxes owed. There's nothing that's going to be done. If you just want a piece of paper that says zero on it, that's fine. We'll send it to you, right? That's how I'm going to approach this thing. As far as the tips, again, I really want to get that list. I really want to get that list. I want to see what's on that list. I mean, there's going to be some things that are just, of course, right? For instance, waiters, bartenders, that type of thing. But I remember there being talks of hairstylists. We there's all over social media. There's barbers that's getting tipped $100, right? But it's always been cash, and is it being reported? I don't know. There's this talk about shared tips and how that's going to be handled because remember, employers are not reporting on the W-2s or to the IRS how those tips are being allocated. Not for 2025 anyway, maybe for 2026. And I'll tell you something else too. Unless you work for a huge corporation that is using a third party payroll company, and I'm talking about like the big ones, ADP, Paycor, so forth, right? Um, there's a 50-50 chance that they're going to get that W-2 right because again, this is all brand new. If you work at a company that has an in-house payroll department, go in there and talk to them. Ask them. See what they say about how they're going to handle reporting the overtime and the tips, right? It's again, it's it's interesting. I'm excited about it. But I am certain that this is going to be something that's going to have to be revisited a year or two from now. No different than the ERC was going on for seems like 5 years after COVID. There were all these marketing and advertising of companies trying to go back and get ERC credits for employers and stuff for years afterwards. So anyway, I think that's it. If I come across anything else, I'll definitely say something or at least post about it. Again, if you have any questions, please don't hesitate to reach out. Love talking about this stuff.